Hello and welcome to this free financial forecast. Today is Thursday, May 19th. I'm Robert Charles, and in this video you'll discover all you need to know in order to trade and forecast the soybean market. We're taking a look at the soybean market because it has a nice looking setup in it and a very bullish trend. And before we get started with that, just want to point out that what we are about to do, or what I'm about to do right now, is what we do at each and every trading day for the major financial markets in our premium service. And you can check out Ichimoku Clouds.com and take a look over what we offer there. Now, to the soybean market. This is on the top chart is our long-term weekly, our medium-term daily in the middle, and below is our short-term 60-minute chart. You'll note that price is above the cloud on all three time frames. And in a bull trend, our lagging line is above the cloud and above price. So this is a very bullish market at the moment, and we'll take a look and see where the setup is. The way it looks on the weekly chart to start is our uptrend on the weekly chart started back here in May of 2020. It was a zero wave, one wave, two wave. Notice how the cloud held price on the downdraft. This is a very significant support point. This is the span B of the cloud, and often acts as support or resistance. In this case, very strong support. Threw it back up, strong three wave, which has now gone flat. So this is a very traditional, typical looking bull flag. There's the pole. This is the flag portion here. Most of the time, a market in this configuration is going to break up. Sooner or later, there are the targets above. And we don't have a signal yet on the weekly chart, but we do on the daily, which is what I'm going to look at next. Okay, so in that same direction, you see it looks pretty similar to the weekly chart. Big pole and the flag. The flag, of course, is longer, many more bars on this daily chart than there is in the weekly, but it looks substantially similar. We just have basically a W pattern in place. Today gave us a signal. This is one of our setups that we typically use, and it's here. There's two ways to play this. It depends on how aggressive you'd like to be. If you want to trade soybeans, you could use a trigger above today's high. It needs to trade above today's high, some form of trigger, some amount above it to get in. That's the way these setups work. If you want to play more conservatively, another way to go is to look at the top of the zone. Now there's this clear congestion zone here, which is bounded by the top of this 3 and 5 wave, the highs here, and the lows of the 4 and the 6. It's almost a perfect congestion zone. You could take a break above the high and play it to the top of our resistance zone. This is our targets. This is our resistance zone in between the targets. And it's hard to see it because of the way they're lined up. You see this black line? We always have a black line inside of our zones because that tells us where price is most likely going to go inside the zone. In this case, it's at the very top of the zone because of the way the market is structured right now. So if you do get a break, that's likely where it's headed. So you could either take it above today's high, a bit more aggressive. You would have to then hope that it punches through the resistance zone, which it most likely will. Go test this top, and if it does break the top, there we go. So you could take it today's high, above today's high, or above above the top of the congestion zone is the way you would play this trade on the daily chart. The way it looks on the 60-minute chart is a bit different. It's a big uptrend still, of course. Our active waves are the 4, 5, and 6 wave, and the 7 wave has so far run right into the beginning of the zone. This is the zone between the two orange lines. There's our black line, almost smack dab in the middle. Price hasn't gotten there yet. However, you see it's starting to congest right around the equaling swing point. Now, what markets often do, like when they break a congestion zone, I'm circling it here. It broke the congestion zone. That often and typically will go back and test the top of the zone. This old resistance should now become support as price comes down to it and then get a bounce. That's very typical. Sometimes it will even go a little bit lower, sink a little bit lower before you get the bounce. So the point of that is it may be a few days before we really start moving to the upside a bit more and start breaking out of this long congestion zone, because we are at a fairly typical resistance point. So we may come down, test these highs, and then shoot up, and that would be the buy. The reason it's more conservative to wait is if you pass these old highs, naturally you've gone beyond the equaling swing, the beginning of the resistance zone, and it will more likely price will shoot all the way to the top. So that is our look at the soybean market. And just as a reminder again, we do this every day with all the major financial markets, the stock market, S&P, Bitcoin, some of the other currencies, some of the commodities like gold and oil. Each and every trading day we do exactly what I'm showing you here. If you're interested in that, take a look at IchimokuCloudTrends.com. Thanks so much for watching. We'll be back with another free financial forecast next week. Have a great rest of your day.